JJ the CPA here, hope you're doing well. So the IRS just came out with a new mileage rate for 2023. It's 65.5 cents a mile. So with the standard mileage rate, it's then an either or. For self-employed, you either take the actual cost of the vehicle, which would be the depreciation, the interest on your loan payment, your insurance, your oil changes, gas, repairs, things to that effect. Those are your actual expenses. Or you would take this standard deduction. Now, one of the things to note related to this is that if you are taking actual expenses, then in the first year that you are going to depreciate that vehicle, there is some special upfront depreciation. Now, I'm going to give you a link to a couple of videos where I go into detail related to that. But the one thing I want you to note is that if you do actual expenses in the first year, you get that big deduction potentially for vehicles that are over 6,000 pounds, GVWR. Again, I'm giving you links to these other videos you can check out. But here's what's interesting. The IRS does allow you in the following year to then take the standard deduction if you would like. Now, there's some caveats to that. It sounds simpler than what I just told you, but that's part of why you need to get a tax professional. But at the end of the day, really what I wanted you to know was that the new mileage rates are out for 2023. I'll put them in the body of this video. Also in the body of this video, I will put what the mileage rates are for 2022, because we know you're going to be filing tax returns for 2022. You're going to need to know those mileage rates, but then planning for 2023. So overall, what you want to be smart on is that when you're finishing up your 2022 tax return and you're making a decision, especially for self-employed filing a Schedule C, are you doing the standard mileage rate or are you doing actual expenses? Just note that only in the first year of you owning that vehicle do you get that big wallop of depreciation. So if you were to take standard mileage rate in the first year of your vehicle that you're using for business, well, then the next year, if you did actual expenses, that's fine, but you wouldn't get the year one depreciation. You would get whatever the year two depreciation is. And so really what it comes down to is for the self-employed, first of all, you need to be an S corporation. Stop filing Schedule C. I'll give you a link to a video on that. Just stop it. Let this be the final year you file a Schedule C. So hire someone that's talented in the tax area, because at the end of the day, especially for small business owners, self-employed, I would say most of the time, unless you've hired an idiot, that whatever you're going to spend in tax preparation fees, you're going to save way more in taxes than that cost. So let's just take it as encouragement to do that. Thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. Have a great one.
JJ, the CPA is here. Let's go, let's go. Yeah. Money, 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 money. You know what it be. Tell them all I do is work, cause money never sleeps. You